Hi everyone, my name is Ken Wax, founder and CTO of Entropy Analytics Group. We're a team of data scientists, software developers, market analysts, and investors. We transform raw market data into intelligence for strategic, trend-based investing. The goal of this video is to show you our data and describe what it is we do and how we do it. I have a few brief introductory slides, and then we'll get right into the data. By the way, there are more in-depth videos on specific aspects of our work on our website. This is just a short intro. So what is it that we do? Our expertise lies in uncovering deep-seated patterns of stock market behavior that are hidden in decades of historical performance. The trends we have reveal market forces that are reflected by dependable cyclical trading behaviors. The data we generate is pretty unique, and the underlying phenomena that drives the trends are an invaluable indicator for analyzing the market. So how do we do this? We use proprietary algorithms to find, evaluate, and grade trends, and we employ copious validation and backtesting to proof our models. Finally, we employ machine learning AI to validate our methodologies. Our machine learning requires a few key things in order to yield useful results. The input data sets, for example, need to be highly customized and structured for a specific purpose in mind. Likewise, we use discrete cohorts of data and selective reporting categories to ensure realistic and informative machine learning results. We also conduct rigorous testing to confirm agreement with the machine learning models and to ensure reliability and repeatability. To give you some idea of our predictive accuracy, 62% of our trends beat all four of our validation indices, and they are S&P, NASDAQ, Russell 2000, and the Dow. In addition, 26% of our trends beat all of those indices by over 10%, and very frequently by a lot more than 10%. The gradient boosting precision coefficient, for example, for our last data set was 0.998, which shows a very high degree of correlation. A quick FYI, the data we're sharing here is all from US-based exchanges, but we have analyses from many international exchanges available on request. One last word about AI and machine learning. If you've worked with very large data sets and integrated AI in your business, which I suspect many of you have, you're well acquainted with the challenges of getting good quality results. We generate hundreds of millions of data points for our analyses. AI can be used very effectively to analyze this type of data. The bottom line is, we've designed our data processing schema and final reports to be perfect candidates for AI and machine learning integration and analysis. And we apply all of that expertise for our clients. So we've reached my final goal, exposing you to a sample data set and showing you how it can be used. So let's dig in. Each one of the rows in this sheet describes a single performance trend pertaining to an individual security falling within a fixed trading window and meeting specific performance criteria. We define the trading window as a buy trading day and a hold period. This particular data set looks at every single buy trading day of the year and all of the hold periods from 20 to 180 days. A trend for us simply means a specific buy day, fixed return period, and meeting a minimum 20% annualized return for at least 80% of the study years. That is what gets a trend onto this list. And I can repeat that because it's an important point. Our rock bottom minimum criteria is a 20% annualized return for at least 80% of the study years. We study and compare side-by-side return periods from 20 to 180 trading days every single year, resulting in over 61,000 performance trends for every stock in our database. Along the left, you can see the stocks associated with each trend, as well as the buy trading day and the hold period, which we refer to as the trading window. A few metrics may give you some context. This particular data set we're looking at contains the analyses of over 1,000 securities. This data set yields over 485,000 trends, meeting our minimum performance criteria. In order to compare performance across different return periods on an apples-to-apples basis, we use the annualized numbers. And as I mentioned earlier, we analyze over 61,000 annual return periods for every stock in our database. This gives us a broad variety of investment windows, return periods, security options, and target industries. It also provides actionable insights for shorting investment strategies. We dedicate our resources to providing the best possible trend data for our clients. Depending on what you're looking for or the nature of your investment strategy, we can filter our data in any number of ways. To begin with, I've filtered this data set by index performance. Every single trend we see here beats all 4 of our validation indices. You wouldn't necessarily always want to do that, but it's a nice example of how the data can easily be searched and manipulated for the benefit of the investor. We can filter by things like annualized performance, and there are some very impressive numbers there. Different reliability scores, and by specific industries or groups of companies, to name a few. So let's consider a couple of examples. Have a look at the very first row of data. The security is IDEX Laboratories. Based on 10 years of history, if I bought IDEX Laboratories on the first trading day of the year, and I held it for 20 trading days, that prospect transaction would have yielded a minimum of 20% annualized return over 80% of the years. And when we push the model a little harder, we see that the same trend delivered a minimum 50% annualized return 60% of the time. This column shows the average annualized return across all 10 years. In this case, 77.4% annualized, which is significantly higher than the threshold values I previously mentioned. And as we look down the list, you can see that just in this immediate subset of data, the trends show performances far above our benchmarks. BioKey International, for example, on line 40, shows a 330% average annualized return across the 10 years during this 24-day trading period. If we take a look at the threshold columns for the BioKey trend, we see that based on the historical data, it shows a strong 90% trend of providing a 30% return and an 80% trend of providing a 50% return. In these 4 columns, we have a reliability score for each of the performance benchmarks indicated based on the historical data, how reliably the trend repeats itself. In this column, we compute the standard deviation of all the performance numbers during the same trading period window across all of the years. All of these columns and more help us to evaluate the quality of each particular trend and how much you can depend on the trend holding true if you stretch or narrow the buy-sell window by a few days. By the way, I know some of these column names may be a little cryptic for someone looking at the data for the first time, so we've provided a glossary of the terms and column names right beneath this video. The last test I'll share with you is the comparison of each trend with the 4 market indices, S&P, NASDAQ, Russell 2000, and the Dow. For each trend in our database, you can see how each one performed compared with the various indices during the exact same trading period. For example, the IDEX Laboratories beats the 4 indices by a maximum of 16% in the case of the Dow. If we look at the BioKey International trend beneath it, however, it beats the indices by quite a bit more, 24% for the S&P and nearly 30% for the Dow. We have many ways of analyzing these trends in order to accommodate particular investment strategies. Anyway, I really appreciate your taking the time to follow along. If you have questions specifically about what I've shared here, or if you're interested in the data more broadly, please get in touch with us by phone, email, or via the Contact Us form on the website. We look forward to seeing you soon.